Hi guys, how are you? Welcome back to Real Macroeconomics and Investing. Patreon.com/Real Macro. Don't forget to click like and subscribe. Come on down because you're going to need this information after Trump just got elected. All right. So we're going to talk about the $1 trillion coin or the $36 trillion coin. But before we do that, and try to understand its implication. It's illegal. Can they do it? What does that mean? Go back and watch some of the other videos explaining how money is created, how it's destroyed, what a reserve is, and so forth. Okay. Very important. You're really going to need this information, even if you're not a trader or investor. You need this right now, and I'll explain to you coming up soon. All right, that's it. Let's get started with this video. All right, so the first question is um, can is it legal for Treasury to mint a $1 trillion coin or a $36 trillion coin or a $100 trillion coin, whatever, and give it to the Fed? Is that legal? And the answer is yes. Okay. We'll talk about the implications. We're going to go through all of that. But before we do that, the reason that this would be a very, very bad idea is because the three legislative branches would be bypassed and full power would be given essentially to the executive branch. Okay? You think someone like Trump would not do something like that? Guarantee you. Okay? I will be very surprised if he doesn't try some gimmick like this. All right? He's going to claim that, hey, look, I eliminated the national debt and we don't have to worry about the debt ceiling anymore. And, we can print whatever we need. No more debt. Okay. All right. So now let's get into all the fun stuff. All right. Number one, the way money is created right now is that a creditworthy borrower, okay, takes a loan and in doing so creates a deposit. When that deposit is spent, it creates income, profit, and savings. Those savings go back um, to purchase government IOUs, bonds, okay? And in doing so, they're going to get rewarded with an interest, okay? Um, the government then takes those dollars, recirculates them back into the productive economy, into the private sector, okay? Spends it, and then it finds its way back into savings, profit, income, savings. Okay. Now, the other important aspect that I haven't talked about the bond market is that the free market sets interest rates. The Fed can set short-term interest rates, but it is the free market that sets the longer rates. Okay. Now, in order for the $1 trillion coin to work, the Federal Reserve would have to do massive QE. Okay, if it wanted to eliminate the debt. Okay, so it would have to QE $36 trillion, whatever the amount is when the time comes. Okay. So it would have to go out and buy bonds at face value. Now, a lot of people don't understand how bonds work. So when the bond price goes up, interest rates come down. When the bond prices um, fall, interest rate goes up. Okay, that's the way bonds work. So if all the bonds were removed, I'm going to extreme case. I'll tell you the mild case. If all the bonds were removed, you no longer have the free market doing what's right for the economy. Because the economy, the free market always tries to fix the economy. So, for example, if inflation is high, Bond prices fall, interest rates rise to make borrowing more expensive to reduce the amount of money creation, okay, by banks borrowing, okay. If the economy is not doing good, bond prices go up, interest rates come down, and that's to stimulate um, the economy. Okay, why? Because it makes borrowing cheaper. Credit-worthy borrowers who go out, take the money, spend it, invest it, whatever. Okay? So that's the free market doing what it's supposed to do. That's the way it's set up. Now, the reason that the economists in 1913 said, "Hey, guess what? We don't want the Fed to be funding government, right? We don't want them to just print up money, give it to the government, and spend it. Why? Because it's going to create inflation. And if it creates inflation, you're going to create hyperinflation, you're going to collapse the economy, it's not going to last. The currency won't last. Believe me, they had a good idea what a greenback was back then. Okay? So what they did, very smart, they said that um, in Congress said in the Federal Reserve Act of 1913, it says that no, no, it's illegal for the Fed to fund government. However, today we do have a loophole in 1996, right? I think it was amended in 2000. It has to be a platinum minted coin, whatever. Okay. Today you have somebody who wants full authority, okay, who could use this gimmick um, to print coins, reduce the debt, eliminate the debt, whatever, um, and thereby essentially destroying the currency. Okay, it won't happen overnight. Now, let's talk about the mild case. The mild case is going to be this: that you know what, we can print $1 trillion, we can mint $1 trillion coin, and we don't have to worry about the debt ceiling. We can just give it to the Fed. Fed says, no, I'm not going to accept it. Oh, you're not? Okay, I'm going to go Erdogan of Turkey on you. I'm going to remove you and put somebody there that is going to do what I want him to do. And the Fed is removed. Put the Fed in there. A new guy, he accepts $1 trillion coin. Now, all the bonds don't have to be purchased, right? But that does give the ability to Trump to print $1 trillion and not worry about the debt. Okay? So all he will have accomplished is to add more zeros to all of our money. And then the 1 trillion is going to say, oh, you know what? We can do 2 trillion. Let's do 2 trillion. Let's do another 3 and 5 trillion. You know what? Fuck it. Let's eliminate the debt. Now, what the Fed is going to try to do is to hold the, re, the reserves. You know, remember what reserves are. Reserves are deposits from the private sector. Okay. So what the Fed is going to do is going to start issuing higher interest rate to make it to entice the private sector not to pull their money out of reserves. Okay. At the same time, it eliminates the bond market. So bonds are not going to set rates anymore. Okay. Now, part of that money is going to be withdrawn and will make its way into the economy. And instead of investing it in bonds, it's going to invest it in real estate, commodities, stocks, okay, crypto. And that's going to make all prices go up. Okay? And then they'll come back and they'll say, well, you know, let's raise the reserve interest even higher. All right. Guess what? You still have to print money, right, in order to pay that interest. So you're going to need more $1 trillion coins to be minted. And then it spirals out of control. Okay. Now, how long does that take? I don't know. That's the mild case. Okay. Um, it's a gimmick that doesn't work over a long period of time. it's an utter unmitigated fucking disaster if he were to do something like this. And again, I would be very surprised he doesn't try something like this um, in the next 4 years. Now, if you wanna get a glimpse into that, what it kind of looks like a little bit, go take a look at Turkey, the Turkish lira. Okay, um, uh, overlay that with inflation. Okay, um, you're gonna be very surprised as to what happened there, right? Inflation spiked to 86%. The currency value absolutely collapsed 99%, right? It was an utter disaster area. So I'll leave it at that. I do want to talk about um, some more things about this in the next video, probably, because I think now it's going to be important to talk about uh, interest rates, the free market, inflation. Why does inflation work um, in some currencies, um, raising interest rates, and in other currencies raising interest rates by 1,000% won't matter, right? We'll talk about that in the next video. I think it's going to be important at this point. All right, that's it, guys. Take care. I'll talk to you guys soon. Ciao, ciao. Bye bye. Don't forget to click like and subscribe. Good stuff.